Hello, welcome to FreeFX. My name is Francesco. Today is Tuesday, 27th of September. I was meant to post this on Monday as scheduled, but there was a delay, so I'm going to post it today. So we're actually looking at the European Open today rather than the close from last night. There's already some price action going on, and it was an extraordinary week last week, and I did a wrap up on Friday for last week, so obviously not much has happened since. And let's go on to the charts now and break it down by time frames. So the first thing we're going to look at is the 4 hour as kind of starting point, and then go out to the higher time frames. So today we are in this position where we've had a run through, we had a divergence here with kind of a flat shelf essentially while price was decreasing, and then we've had a rise, so a negative divergence started on the 23rd, and then we started the week essentially with price rising, and now it's kind of closing to near the 0 CCI level. I went long late Friday. Yesterday was stopped out. Would have probably reached my target, which was about here, but I was stopped out before that. But a very small move it was, as you can see, from Friday, relatively. And so now we've reached the 21 WMA, as it's often the case, and as mentioned before, when we have the Bollinger Bands set out on a 4 hour at least. Sometimes the basis is a bit slower because it's a simple moving average to react to price, and in a way price is more precisely represented by the 21 WMA. And I've just experimented with different lengths and found visually this one to be a better fit. And so obviously when setting targets, as you can see, this is a recent example, we sometimes need to use that one instead of the basis in a kind of conservative way, trying to hit your target better than trying to get the maximum out of your trade and then missing a target. Like here, for example, I didn't even get to the 21 WMA or just. Sometimes it goes to the basis, like here, because the basis and the 21 WMA, when it's a very narrow set of Bollinger Bands, will be the same price level pretty much. But other times I can go back and give you more examples where that is the case. As you can see, for example, I have to go back quite some time, but I could find you examples where it is better to use, like here for example, what is this, back in May, we hit the 21 WMA with a difference of a few points, and here as well, later on 12th of May, and so on and so forth. So that's where we are, and then today we had an actual move to the downside, again at the 21 WMA, so I've gone short, and it's just coming back to break even after dipping higher, and so see how this one develops. The main thing is that we are, this green line that you can see is the 20, actually just go back to the time frames and go back to the daily. So this is the June low, and to be absolutely precise is the 16th of June low, and we arrived at it on Friday and dipped just below, and we are sort of bouncing off it. So in a way, my understanding was, looking at the daily here, we hit this low, which everybody's talking about, and as a sort of benchmark, if you like, and also the Bollinger Band, the lower band, is quite stretched. So if you look previous examples, let's take the one before in June, we had a stretched lower Bollinger Band with let's just stretch that out a little bit. So we've got 1, 2, 3, 4, 5, 6, 7 candles to the downside. Here we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to the downside. Now the important bit here is not how many candles there are to the downside, but how many candles have been pressing on the Bollinger Band itself. So we've had 4, and before that we've had 1, 2, 3, 4, 5, 6, 5 or 6, and here we had 1, 2, 3, 4, So what I'm trying to say is you could kind of statistically look at a few of these and come up with a measure of how many candles it takes in terms of the Bollinger Band being forcibly expanded before it retreats and these two bands start converging again. Okay, because after an expansion, taking the previous example, you always have a contraction, and with a contraction you have a bounce or flat period. So I was expecting a bounce. I see the CCI coming from the extreme there, as I mentioned before, below the 200 level, negative 209, and we started kind of coming up. The candle has been a bit of a sort of wiki candle, so it could be that this dips below again a little bit more. So I'm a bit uncertain as to what happens to my trade, and that is a very difficult place to be in, of course, as a trader, but you always have to judge by the short term and the medium term. So now, just going back to this triangle, this was the ascending triangle that we had in July and June, July, and this ascending triangle broke to the upside. The break to the upside didn't result in a trend. We actually then had a downtrend. So it was essentially, it was we can call it a fake out or a breakout and a pullback. So it failed. Essentially, this breakout from this triangle, I mentioned this, a few weeks back. I mentioned this in a very sort of graphic way, but try to imagine a triangle around this price action. Broke, and then it's sort of fallen right back to the level, essentially, of the bottom of the triangle. So we are back at the levels in June, and this breakout didn't result in an uptrend. That's very important to kind of always go back to previous analyses and try to conclude what has happened in the meantime. That might sort of change our bias, or might sort of confirm what we said. And what we said at the time was that triangle breakouts have a rate of failure, but it could have obviously gone in a different way. So on the weekly, we are pushing on the lower band. I seem to remember as well that we are close to the weekly 100-day moving average, 100-week moving average. Anyway, these are significant levels for a number of reasons, obviously. The CCI is not at its lowest, so the daily is sort of bottomed, but the weekly hasn't. We hit the bottom at in June, obviously, and we sort of dipped twice to the 200 back here, 16th of May and 16th of June, or the week of the 13th. So basically 1 month apart, we have two touches of that, and then we're approaching this, but we haven't got to it. But we could bounce, as we saw back here in March, before we get to it. So the Bollinger Band is expanding to the low side. So again, inconclusive. Monthly looks like this. We are approaching the lower Bollinger Band. We're not to the extreme 200, and as I said, these are the levels on a CCI that we saw during the pandemic. But if we went to the 2008, we approached the lower Bollinger Band, had 2 months flat, and then dipped below. October was the worst, and then went below the 200. So by all analogies, we could be in for that push lower below the 200 daily moving average. On the weekly calendar, we don't have a lot of event risk. We've got the PCE deflated data. We've had Fed speakers. We've got more Fed speakers. We've got lots of things, but I think the main thing to remember is that the sentiment now is kind of turning negative. The Dow Jones has dipped below the 20% from all-time high, so that's a bear market. So all the Nasdaq, S&P, and now the Dow have joined ranks. So we're definitely in for more downside, I think. That's the end of my video. I will see you again at the end of the week. I hope that you have a great trading week. Take care. See you next. Bye.